All right, you get the biggest business news in Nigeria today. The Monetary Policy Committee of the Central Bank cut the policy rate on Tuesday by 50 basis points to 26.5%, in line with economists and analysts' expectations. It's the first rate cut in nearly 6 years by the financial regulator. Was done on the back of what is called stable foreign exchange market, a disinflationary environment, and improved fiscal outlook. Now, let's take excerpts from the post-monetary policy committee briefing by the Central Bank Governor, Dr. Olayemi Kadoso.
News editors, gentlemen of the press. The Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its 304th meeting on February 23rd and 24th, 2026. The committee reviewed key developments in the global and domestic economies, as well as the outlook. 11 members of the committee were in attendance. Decisions of the MPC. The committee decided as follows. 1, reduce the monetary policy rate by 50 basis points to 26.5%. 2, retain the standing facilities corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and 75% for non-TSA public sector deposits. The committee's decision was premised on a balanced evaluation of risks to the outlook, which suggests that the ongoing disinflation trajectory would continue, largely supported by the lagged transmission of previous monetary tightening, sustained exchange rate stability, and enhanced food supply. In reaching this policy decision, the committee took into account the sustained deceleration in year-on-year headline inflation in January 2026, marking the 11th consecutive month of decline. This downward trajectory in inflation was driven mainly by the continued effects of the contractionary monetary policy, stability in the foreign exchange market, robust capital inflows, and improvement in the balance of payments. The momentum was further reinforced by relative stability in the prices of petroleum products and improved food supply conditions, especially staples. These outcomes have indicated that prior tightening has continued to anchor expectations. The MPC particularly noted the remarkable performance of Nigeria's external sector, evidence supported by higher export earnings and increased remittance inflows. This has contributed to greater stability in the foreign exchange market and bolstered investor confidence. Members also welcomed the newly issued Presidential Executive Order 09, which redirects oil and gas revenues into Federation accounts. The committee acknowledged the potential impact of this order in improving fiscal revenue and accretion to reserves. Given these improved macroeconomic conditions, the committee believed that a moderate easing was consistent with the prevailing inflation dynamics. Members acknowledged the continued resilience of the banking sector, with most of the key financial soundness indicators remaining within regulatory thresholds. With regards to key financial soundness, he noted that of the 33 banks that have raised additional capital, 20 have met the new minimum capital requirement.